Okay, so good morning, everybody. This is Simon with ToughTrader.com and Trade and Perform Coaching. I knew I was going to forget one thing, even though I went through my checklist this morning. I did forget it. Okay, here we go. So before we get started, what did I do with this? Let's see here. There we are. Okay, so past performance. I hate this disclaimer. You have to put it on. Past performance not indicative of future results, right? You can lose your ass trading futures. Have a trade plan. Have a risk plan. The whole goal is to stack chips, either day over day, week over week, and trade after trade. If you're blowing up, you're doing it wrong. If you're drawing down hard, one day is okay. Every day is not okay. You're doing something wrong, right? You got to identify whether your problem is emotional, psychological. Is it you don't have an edge? Whatever it is, get it fixed, right? And then last, this is for educational purposes only. What I'm doing here is sharing my trade plan with you and the way I trade, right? The way I trade does not fit everybody, and the way people trade in the room, they generally take what they like from me and they adapt it to their own pattern. We have swing traders. Some guys are swinging. Some guys are only options. Some guys are scalping actually significantly more than I am, okay? Find your sweet spot and trade it. That would be my suggestion. Let me get this up. Okay, so we are on the U contract. The reality is that the volume will probably not roll over from the June to September until Friday. Okay, but TradeStation rolls over, so I roll over with TradeStation. That's going to create two issues for today. The first thing is going to be pretty obvious to see, and actually let me get this started here real quick. One sec. I knew I forgot something. Let me plug this in so you can see the other computer screen. In just a second. There we go. Here we are. Okay, other computer screen now. Okay, see how this is overnight in ES. See how nothing's lighting up blue or pink on the algo? That's the algo, right? See how nothing's lighting up on the bars as compared to yesterday. And you know what? This is all the U contract. So normally what it looks like is this, right? We're getting different color bars, and the rotations are setting up pretty easily off being able to easily identify where the key sellers and buyers are from a prior day. We are going to be missing that for a good part of the day today. The algo, I'm going to have to, all the heavy lifting that the algo does for me, I'm actually going to have to do that heavy lifting on my own because all it's going to identify is the volume. And that's because the deltas, when you split the volume between two contracts, the deltas go down. And I don't feel like reprogramming the algo so that it identifies it just for these 2 days. Okay, the other thing I want to suggest, on days like today, you get weird price action, okay? Liquidity is thin. Okay, what are the factors behind it? First of all, liquidity is thinned out between two contracts. That's the obvious part. The second part between that is hedge funds, mutual funds, large block traders that are rolling large futures positions and options on futures have to roll those into the new month. Now, hopefully they take the whole week to do that, but generally every once in a while, they do that whole move in one day, or there's some weird move and it causes a bizarre move and you get a outsized stretch that's unexpected. And what's unexpected is not the stretch, right? The market moving up or down is normal. It's the lack of counter rotation because of the lack of liquidity. So I don't know how else to describe it other than I watch out for it. The same rules still apply, and we're going to go through those in just a second. Want to make something else really clear. If you're not stacking up profits day over day, I don't care how many trades you call, right? How many things you see. The end of the day, you have to look at your P&L and go, yes, my P&L is stacking up day over day, or it's not, and find what the heck the problem is if it's not. No one cares what you think about the market if you can't put the profit down. Okay, and it doesn't matter how you do it, whether it's through 1 trade a day or 10 trades a day, right? And then one last piece. I had someone in the room, and this is not a criticism. It's very normal. I want you to be aware of it. Yesterday, we were long, And I had two people that reacted two different ways. I'm obviously not calling out any names because that does not matter. Yesterday afternoon, this is where we were long, right? This bar specifically, right? Wow, I can't draw it. Why is this not drawing? There we go. This bar specifically right there, okay? So there was a zone up here, and there was reason to think that we might get a counter rotation here. However, that move up, it's very rare to get a velocity of this move up and have it reject and come right back down. So two things about that. What that trader did, two traders in the room missed the trade completely. One simply tried to bid it in so that it fit their stop, which is nothing wrong with that, right? They simply said they wanted a 2-point stop max on that trade, and they tried to limit back on the trade and didn't get filled. They followed their trade plan. Good job right there. The other trader was simply not ready to pull the trigger. Okay, the difference is one trader who didn't get filled here said, I missed the move and was okay with it and left for the rest of the day. They were agitated and pissed that they just missed this lift. We nailed it right at the low. The other trader followed a response that I have myself, and I completely understand. I missed the trade. I see how far and how quick it pops. I get mad, and I flip around and go, you know what? I did not get the short. I mean, I did not get the long. I'm going to short it. Even with the setup, when that's your knee-jerk reaction, for me, it's always, I might even wait for the right location. It's almost always out of frustration. And all I ask is that you think about before you take that trade, or the flip side, if that sequence occurring, you miss a trade, and then you're going to take another trade. And the reason is I missed that. I'm getting my next one. Give yourself an hour break to reconsider. There was plenty of trading opportunities yesterday, right? And even if there wasn't, it's not worth getting run over and getting stopped the other direction. It's frustrating to miss a big trade, but not nearly as frustrating as missing that trade and then taking a loss. That's my 2 cents on that. I think the proper way to do that is to be aware that you're angry that you missed the trade. I know it happens to me. It's not cool. It's not fun. That's that. Okay, next, let's jump in and look overnight. So, and then we'll do the profiles. Okay, so if you look, we're trading in the middle of the overnight range, right? We're not overly long. We're not overly short. See, that's just kind of blah, right in the middle, right on VWAP. Not a particularly big edge there, right? We obviously have to get over this structure. There's no big deltas. I can't really tell if there's a large buyer or a large seller in there. It looks pretty neutral. Okay, on NQ, a little bit different story. Let me drag this over. NQ was obviously overnight. This is the overnight. Let me show you that right. NQU18, that is correct. Okay, you can see that we're slowly just doing this walk down. So my first question is, when I look at that, so this is yesterday afternoon, and I look at the push down. So I noticed a couple things interesting about NQ, and because I want these two things to match up. First of all, NQ is way extended. Does not mean, as you know, if you've been following me, I've been hammering the don't short table. I am still, unless your skill level is very, very high and you're willing to, after taking a stop, take your next setup, I wouldn't be short this thing, right? There's going to be a long liquidation day somewhere in here. Guaranteed there's going to be a long liquidation day somewhere. I will probably miss the long liquidation day. I'm all right with that because I haven't been fighting the short all the way up, right? And it's benefited me significantly. In order to go lower, you got to get below this structure. You'll want to write it down right here to the left. That was the last consolidation. It's not a very strong consolidation, right? It was right before the close there, but obviously you have to break that to go down. So on the U contract for NQ, if we're not trading below 72.18, it's kind of a shoulder shrug on any push down. Yeah, I know we're behind the 62 retrace from overnight. We've been trending down and all that. If you don't get below 72.18, and really if you look at the structure behind there, you got to get into this structure over here to the left. But this is the first warning sign on NQ, below 72.18. I think there's a possibility that we get some profit taking, maybe some long liquidation. Okay, that's enough on NQ because, as you know, I've been shying away from trading it too much here lately. The focus is on ES. So on ES, let's jump over to the TPO. Okay, see this TPO right here? See how it's all, okay, when I look at a profile, it kind of gives me an idea of where I can find support or resistance. So a couple of pieces on that. We are currently trading. This is my, let me make sure I have this chart set up correctly. I do. RTH chart. Good deal. Okay. U contract. Let's make sure of that too. U contract. Great. Okay. When you get a profile like this, see this profile, see how it's all kind of choppy like this? See how this profile is all kind of choppy like this? See how it was easy to trade all the way through this right up until we got to the next volume node? Okay. It becomes easy to trade through all of this too. See how this is just not. So if you look on the following day, so what I want to do to get an idea of how the market will trade is I go look at how the market traded through days that had a somewhat similar profile. Okay, so see here how we anomaly, bottom of anomaly, kind of sorta. Then we come down to the next anomaly and bounce. Then we get underneath the anomaly. See how it was all, it did roll all the way through here, but see how it did it through and chop? Okay, just know you're going to get chopped when you have a profile that looks like that. I'm going to give one more example. Those are 30-minute bars. So obviously there was a lot of rotation up and down. Let's see if I can find another one. Here, this kind of sort of looks like we have a triple distribution there. So if you look off to the left, I don't know if we ever traded back below 2,700 just. Let's look. Did we? Right there. So if I highlight that profile, let's see, how far back do we go? Okay, here, let's look. That's this profile here on the left. Wow, I lost it. Give me just 1 second, guys. I will find it so we can use this as an example. Here, this is kind of similar right here. See how we just jump over until we get all the way down to the last anomaly down there. For those of you who are new in the room, I know this is boring stuff. It doesn't tell you anything. What we're hunting for is the last anomalies on the edges of the profile to give us an idea of where the reversals are going to come from. So I assure you, if you go through this, if you look like at the third here, see this? The 23rd, excuse me. See how we were able to trade all the way. See, we opened up in that A period. It's sitting right. I know you can't see it on the screen, but trust me, that's where we opened. We pushed up into this final anomaly, auctioned all the way down, past the bottom anomaly, got back above the last anomaly, and pushed all the way back up. But the important point is, see how this has a fairly non-committal distribution all the way through here. It's just all kind of, even this is kind of like blah, right? It's easy to trade through it. It's easy to trade through this stuff too if you look to the right there. Okay, see how we were able to go almost all the way. I understand that we bounced out of this when the market's strong, but when I see a profile like this, my concern is primarily to make sure that I'm not getting long liquidated through there. So because of the way the profile looks today, there is a chance that we get long liquidated through this or in the future. So what has to happen in order for that to occur? Let's go through the pieces. First of all, we're trading 27.79. We have to be below 27.77. If we are holding above 27.79, it's a small gap, but it's a gap. You got to get underneath the settle price, and you got to get underneath this first anomaly. This is where you write down notes so you can follow through. If we don't respond, there's a hole right behind that 27.74 to 27.77. In order to even think about short, right, you want to see, are we trading underneath this level? So remember, here, let's do this. These are our targets on the day, right? I first start off with where we closed from. I add 27, and I add 79, and I add 20, brings us roughly to 2,800. So 2,800 to 2,810. That's about as big an extension as I'm going to expect on ES to the upside. The market just gets tired, even with the best of news. Plus 20, 25, 30. These are areas I'm looking to short. The opposite direction, 27.79. I take that. I roll all the way down from 79 to 69.59. That puts me at 60. That puts me at 59 right there. And 59 to 49. Okay. If you'll notice down here, that would re-auction all of yesterday, right? It would put us into the final anomaly right down here. And I would look for a big response out of this area as well. In between here, there's not a lot. If you look at the chart that I posted last night for the members, right? If you'll look over here, you will see on ES that I have a just vacuum of space between 27.76 and 27.88. The reason for that is the same reason as yesterday. Here, I'm going to show you this, even though the data will be messed up a little bit because of the switch in the futures contract. And again, we're using the algo to help us in like we got from the low yesterday. But if you'll look, see how I left all that space? So this is where we closed. So obviously there's a difference here of about 4 points. But the reason why I had no zone here, so this consolidation actually took place down here. You got to remember that TradeStation rolls it over automatically on the continuous contract. So all of this took place about 4 points lower, and there was no zone here. There's no zone here because there was no resistance in here. When you look at the profile, there just was nothing there. So I want to, so that everyone can learn what that looks like, I want to show that. Okay, see how we were able to consolidate, then easily bust all the way through here. Okay, that picture. Now take it over here, guys. And guys who are new, I'm ADD and dyslexic. I do not carry a linear thought, just FYI. So that's the top. There's an anomaly right there. I want to show you all this. Back to the left, this was March that we were re-auctioning. There we are. Okay. There we go. Okay. Oh, hold on. I need the prior day's low here real quick so I can show you this. Prior days high, right click, color red. Now go back to 316. Okay. So this was the prior day's low. This is where we closed out. All of this is what needed to be auctioned above. So see how that day is kind of like, blah. We kind of sat there for a little bit. This is what we tested into, and we pushed out to the upside. But you'll notice above, see above how there's a lack. See how there's a lack of any geographical anomalies. That's the way I would drive it. Think about it as looking at a topographical map. Okay, when you look back on this in this profile, okay, there was 2 areas that needed to be beat yesterday. It was this 63, it was this area here, okay, and because there's a naked point of control and naked volume point of control. But notice it wasn't prominent. See how it kind of looks like a plateau instead of something oddly sticking out in the middle of nowhere. Now, see this little period right there, that D period that's just kind of hanging out all by itself, okay? That's the reason why there was a zone there. When you get a geographical anomaly that's stuck out in the middle of nowhere, it needs to be fixed. That's what got fixed yesterday. So now if you come over here and look, right, what you will see with all those little zones plugged in. There we go. Hold on a second here. Okay, so remember, this is prior day's low. Everything above here is what we were checking out. So if you look, these are where the geographical anomalies were. Now look how the market treated all that through the course of the day. See how we push up, push in, consolidate through here, but don't reject. See how we pushed down below into this prior day's anomaly and pushed out. And now we rolled all the way back up and closed into resistance, right? And now that was 27.75. We're obviously trading a little bit above it. And what you want to watch for, since we closed at the highs, that over under, and if we get below 27.75 now, watch for the long liquidation back to the downside, right? So here's what I find that's interesting when I talk to people about this. Okay, so what I'm doing, what I'm explaining here, guys, is where all the money is. And what I find interesting is when new people come in the room and traders who are new, right, who have not spent a year or two losing money, right, or pulling their hair out, all of this looks like bullshit to them, right? They're like, it's too detail oriented, it's too small. I just want to know where the trade is, okay? And because they don't understand why the market reacts from places that it's reacting from, they never can knock out the home run in their trade. They can never get consistent because they don't understand where the structure is deriving from. So understand, in my layer, in my approach to the market, this is the base. This is the understanding what the hell's going on. This is why when we're down in this area down here, see those 2 anomalies that are sticking out? This one and this one right here. And then I get this bar. So that zone was a white zone, right? And then we come over and we get, that's NQ. No one gives a dang about that. There we go. And then we get this bar. Right here, okay? And I know that that chart, okay, so I'm going to flash back and forth. I get this bar right here, okay? I'm going to come back to this chart really quick. and I look at this chart right here, and I know that that's where the TPO and the volume point of control is. I know that if we're strong, this is going to look like one of two ways. The best way is to simply never trade back underneath that value area high. First clue that we might have a trend day up, okay? But next clue is when we dash in here, see how, okay, not only is there anomalies right here, but there's a little itty bitty tiny hole right there. I don't know if y'all can see it, but trust me, there's a tiny hole in the profile right there, okay? The only thing left in here and where I'd want to be long is that H right there. If we get to that H, when we get there, and we can do the over-under pattern, okay? Those are in the room, know what I'm talking about. We can get underneath, establish above, bounce, underneath, hold, back above, backside test and go. That is the money trade right there, guys. If you don't take that, that's where the swings come from. Options traders should be looking for swings out of those areas. They're big deals, okay? So when I see this, and then if you remember yesterday, because it's changed now, but this is also a huge delta. So see how that shows on 144 was a 3,000 delta on that bar. Okay, and if you'll look, so see what's interesting here about is even though the deltas were cut down because of the volume's not on this contract yet, but look on the way down. Okay, so first of all, what else did we have here that was interesting? We were between the second and third standard deviation away from VWAP. High odds location, right? You get paid out of those areas. Okay, number two, we had a clear target up, VWAP, right? It was almost from where we were trading yesterday, it was almost 7 points to VWAP. Okay, number three, see when you look all the way through here, see how this delta was negative 144 and we closed at the high? Now, that's not a magical candle, okay? You can't look at that and go, oh my gosh, that's it, because I can show you them all over the place. But when they occur at location, you've got to jump on it, okay? And that's why I was emphatic. I was waiting, and then the algo, this was colored blue yesterday. It was so obvious that it didn't even take me a second to figure it out, right? And that's why I immediately turned and said, if you got out, right? If you'll notice on the push all the way down, that was the biggest negative delta of this whole push down. When you got this, there was actually one decent sized delta over here that we had to get over, okay? If you switch over to the other contract, it's there, okay? Which is why we came up. We got underneath, we rejected, huge delta at the bottom. If you'll notice, that's the biggest negative delta. So this 306 is what had to be beat right here. See this? Here, I'll highlight it for y'all so you can see this. This 306. Okay, see that? That's your biggest positive delta on top. He was trapped, okay? So see how we came underneath? We pushed into him. So see what happened here? See how that's a high volume bar right there? Okay, it's high volume relative to the prior 10 bars. That's why it highlights. Okay, I have a formula working there. So see how we closed above this guy, backside tested, and launched? That was it for yesterday. The market was gone from there. That's what started the trend day up. Okay, so you got a combination of this buyer being trapped. He tried to long liquidate. This guy probably became the seller here. We tried to push hard to break the low, failed, closed at the high, push above VWAP, but more importantly, above my last buyer that had gotten trapped. That's what switched it, and that's why you did not see me for the rest of the day coming in and going short anything. I was like, do not short, because that is what beat the entire day. The only mistake I made yesterday that I was pissed about, I didn't buy the calls while they were down there. That was an easy on the same day expiration. That was a quadruple, if not a five bagger, it was a four bagger at least. So I won't make that mistake again. That was my regret from yesterday. And the best thing I did yesterday was not short. And if you look at this pattern here, see how when we're up here, I want to show you one more thing when you look at this. Okay, see this right here, this consolidation period where we grind and grind and grind. Okay, look at the pattern through here. Where's the biggest seller through this whole deal? I see a negative 136 that closed at the high. Okay, these lined up, okay? I see that we try to push below. Right, see these stars that are pushing up, pushing down? These are attempted momentum shifts is what those stars are. Okay, they usually follow. They're important. Why? Because if you look, it didn't give it to us here, but there was a star here yesterday. Again, the contract switching off, right? See, when we get these stars, I tend to get momentum shifts underneath them. But when we get above them, okay, so there's my kind of my star trend line there. right? Indicating where the traders were trying to push to the downside. So this is just the opposite on top. See this? This should result right here in a break to the downside. Those two stars, this should result in a break to the downside. Notice, as soon as we close above those two, see ya, because everyone was accumulating shorts through here or waiting for a roll down and a test of VWAP. And as soon as that didn't happen, slam and push to the upside. Pretty straightforward. That was a great continuation. I don't buy off the top, but that was a great continuation pattern. You had to know not to short. So for today, trade plan straightforward, right? If I look, we're opening at 27.79, right? So I know two things. First of all, let's get rid of this. We're opening at 20. Let's make this smaller. We're opening up at 27.79. I know I have to be underneath 27.76 and a quarter for any consideration lower. I have an anomaly right there on top. That's why there's a zone there instead of simply being marked as a high. This is a little bit different. Instead of trading the over under, so I'm asking several questions. Can we trade back inside 27.76 within the first 30 minutes to an hour? If we can't, if we cannot close back in, strong odds that we push up this way. So let's go through the checklist real quick. If we push up this way, let's pretend this is the 50-60. I don't want to see us close behind the 62 retrace. Very unhealthy for the market. That's a big clue for potential long liquidation. Second clue, we are opening above. If we come in here and we don't get responsive buyers here and we establish underneath here and we push back in and find resistance or sell indications up here, that is a clue that we can push back in. So see how this is purple? Okay, normally this would be a yellow zone. The reason why this is a purple zone, I need to see support because if this gets busted straight through like that, that would be a clue to me that we're going to have long liquidation for the day. The white zone is still valid, but again, remember the context. That profile is a pretty weak profile overall and would be easy to trade all the way through. So heads up, this would be a stretch. From where we're opening, okay, we're opening at 79, 10 down, puts me roughly at 27.70, right into support. I want to see if I can get a responsive buy. Again, I'll turn to the algo to figure that out. 27.79 brings up 27.69. I don't have a zone at 26.69. See how it's empty? So that makes this 27.66 to 27.64. I would expect a response out of this area. It's a 20-point stretch. And where would be my target? Back to VWAP, back to mid, and back to this purple location if we get down here. Inability to hold this zone and getting underneath, okay? This is Wednesday's afternoon swing low. That was this right here. This is what bulls want to defend. If we creep underneath that, that would set up really a push to the downside. This is where I'm looking for over under between 57.50 and 54. That's the last anomaly, needs to be repaired. I'm not worried about a long liquidation. The obvious answer is we're going to push up, right? So I'm trying to get the checklist of what would make it not fit properly, right? What would be different about seeing the buyers not step back in. So I'm going to keep an eye on NQ, and I want to remind everyone on NQ, right? What happens is you get emotional at the top because you think we're going to break down at some point. And everyone looked at this yesterday. I had several people text me and go, long liquidation, NQ, question mark, question mark. And I said, you better make sure you get below the low before you do that, right? Or else it's just open, sweep the range, and pop back up, right? So what happened? We opened up, lower lows, lower highs intraday. Everyone who's a trend geek looks at that. And then what happened? The problem isn't shorting up here. Take your shot. You can, as long as you don't close above this, you're good, right? The problem is shorting down here when you start going sideways and you can't make any progress to the downside. They trap traders the same place the prior day. You got to break this, right? So you have a pretty easy visual. In order to get down at this point, this has been defended 2 times. This area, the 71.60, 71.80 area has been defended. I'd want to see an impulse move above so I can get a push back in for a short. But everyone who looked at this yesterday, so look, remember how this looked on a 5-minute? If you were trading, stretch that out, and people were like, wow, look at NQ. It must be going down for the day, right? And they forget everything else they know about the market. Like you got to break support in order to have a down day. They came in, they get committed to they're like, oh, I'm going to short the first short. Looks like we're open. Let me turn off that speaker. They get all geeked up. They short. They have images of NQ down 200, and they get bone crushed. That's how the market works. Okay. Once you go above here, notice how neat the price action is. Close above, backside test. CU. Notice again, if you got emotional here with this breakdown, whatever the hell caused this breakdown, didn't get below structure. Thank you for shorting again. We're going to make you pay yet again and again, by the way, because you thought you could short the end of the day and you got crushed yet again. So 10-point rotations, tick divergence. Oh, and by the way, yesterday off the low as well. I didn't cover that. I thought I highlighted it. But into the low. Okay, two things. See this? Into the low. See the tick divergence? It's freaking glaring. It's not even like remotely close. It's glaring through here. See that? Look at the low. Look when we punch in through the low. They just can't. And here was the deal sealer right here. See that negative, biggest negative tick on the day, and we don't go down at all, right? That's when shorts were totally screwed at that point. You get the biggest negative tick. You get no push to the downside. Guess what? Shorts are toast, absolute toast at that point. So at any rate, that's my 2 cents about that, guys. If we just lay back, the best trades have been coming outside of the first hour, not inside the first half, not inside the first hour. I need to turn on my trading domes real quick. Give me a second here. Yes, the account has been changed. Thank you. And I need to change my other trading dome. 1 second. And if you still want to trade the contract with the most liquidity, it's still the M contract. There's no question about that. And then finally, the last thing I want to show, guys, before I jump off of YouTube is the oil overnight. Yesterday, we caught the low off of that. Where is this? Here we go. Okay, here's the zones from overnight for my overnight traders. And you can see, so this is Asia open. You can see that we tested down into value area low. That's what the purple line is. Response back up almost immediately. That was a great long. This is what this was a great long location. That's all there was to it. It got it second test. They tried to break just underneath. See how they just ran the little stops right there, and then it was all over. Right up into resistance. You can see the rejection. You can see rejection right there about 5 in the morning. Right? See that push through? You're now above that anomaly right there. Backside test, push back up. Now we're doing this. See how we've now established this over under? Okay. If we get back under there a second time, or I can get a short indication out of this area, right? Clear test this again to value area low. We're not trending up or down. We're trying to build some energy down here at the bottom and get recovered. If you look at the, this is the, let's close this. I don't need this. If you look at, there we go. I don't need that either. Close, yes. Okay, so if you look at this, okay, that's a 24-hour session. Bring it back over here real quick. Okay, see this? All those profiles, we're building energy for a move above. There's a clear almost double top at 66. Above 66 breaks us to the upside. There's some areas to check up on above, so it'll probably grind through there. But this is building energy. We now have 4 days of balance. So I'd look for a vertical move pretty soon. It's rare for us just to sit sideways like this. It's building energy. So I'm looking for a move above. Again, above 65.29. Clear targets above are 65.67 to 66. Above 66, we have, see how it all of a sudden gets lots of space in between? We have plenty of room to trend up above 66. Has to get above 66, but if it does it, it's great. The green zones, by the way, are my highest odds zones. And you can see we tested right down into it overnight, and we've been holding it underneath there. The target also has plenty of room to the downside because everything below has been auctioned. This is the U.S. session only. You can see the same thing. We're building energy. And what's interesting about the U.S. session there, see how we're building energy right here at that 60, right where we're at, 65.26. If we can hold that base, that's where all the value has been during the U.S. session, below that 65.26. If we can hold, it's a pretty clear shot from a day session perspective. We'll have some resistance right here in the 65.96. So that would be natural. It'd also be a decent stretch, and it's a round number. You'd expect resistance, but above 66, that 66.51 is the clear target, right? So you can see we're building energy. This was off the long liquidation above. I think we can pop. We have plenty of room to pop back to 66.51. I think we can make it all the way back to 68.27, but we get below here, story changes. But this is a nice build underneath, and should set us up for a move to the upside at some point. So that's my 2 cents on oil, guys. Anyways, let me get these charts fixed up, and let's go have a great day. Okay, we're opening up. NQ's trading at the low, minus 21 points. It's had such an enormous run. Again, the sheep are programmed to buy that thing at this point, so I wouldn't be in a rush to grab it. We're trading right on the 24-hour VWAP. I would let this expand its energy one way or the other before wanting to jump in almost immediately. Okay, so I'll switch screens over, guys. We'll keep this like this. Remember, your only goal is to stack P&L. I'm really serious about it. Don't blow up. It's not worth it. It's just not, it's not even necessary. There's nothing cool about it. There's nothing like, wow, I gave it a good fight, but it killed me. This shouldn't be like a casino. This should be nice and relatively boring, punctuated by pretty good opportunities for making some money. Your satisfaction should come after you've executed well, not from, oh, I did X, Y, or Z. It just shouldn't. There should be no excitement in an individual trade because so many people fail at this. Your excitement should come after you've nailed multiple trades in a row and you have the satisfaction of building your trading account. One trade, who gives a shit? I know I get excited as anyone, but I try to calm back down because at the end of the day, I look at my P&L and I've got to survive all my bad trades in order to make it through my good trades. And you've got to work to find what your good trades look like. Anyways, guys on YouTube, thanks for joining us. I hope you learned a little bit. Hope you have a good trading day. Mind your risk. And remember, options rollover. The PA is going to be a little bit weird because the liquidity is just off a little bit. Talk to you later, guys.